Good afternoon, everybody. Welcome to Talking Real Estate with Champions Real Estate Team here at Berkshire Hathaway Home Service Ambassador Real Estate Company. My name is Mark Wehner II, team leader at Champions Real Estate Team. Joining me today is Russ Williams. So thank you for joining us, Russ. So those that have watched us before, we jump in, talk about what's gone on in the real estate market over the last 7 days, actually 8 days, because yesterday we usually do it on Wednesdays, and yesterday I had showings and just got caught up and got busy and all that fun stuff, which is good. But yeah, so I just want to jump on at least on a Thursday. Maybe we're a little day behind, but that's all good. So start with a quick tip today. So what we're talking about is kind of just what the market's doing. One thing we hear a lot is sellers are paying closing costs, and buyers hear that and say, "Oh, hey, that's $10,000 that I'm not having to pay, at closing." Well, yes and no. So basically, the thing is the seller's allowing you to finance that closing cost in the purchase price of the house. So let's say you're going to get $5,000 that the sellers you wrote in the contract to pay, five buyers closing costs of $5,000. Well, truly, that's just adding that on to the purchase price, not really adding it on, but the seller's netting less. So that seller, say a $300,000 house, you ask the seller to pay $5,000 of your closing costs. That seller's truly netting $295 on the sale of that house, but the purchase price is $300,000. So you could get that house at $295, pay your own closing costs, and not pay interest on that $5,000 over the life of the loan. Let's say you're getting a 30-year loan. That $5,000 would in turn cost you more, in 30 years than just paying it up front. But the pros and cons to that. So one, if you're having that seller allow you to finance that into the purchase price of the house, then you have $5,000 still left in your checking account, savings account, so that if you need to get furniture or blinds or buy a new lawnmower if it's your first home or things like that, that you need that cash on hand, and that's great. That's fine. Then do that. But if you have the cash, I've worked with clients thinking, well, they're paying my closing costs, so that's good. We want them to pay my closing costs, and I don't have to bring as much to the table. I'm like, well, yeah, but you're paying that over the life. And then once you explain that to your clients, and then to me, it doesn't matter what you choose to do. I just want you to understand the lingo doesn't quite match the math on the ledger sheet, essentially. So that's just one thing I want my clients to understand. Does it make sense to do that? Does it not make sense to do that? Some say, hey, if you don't have the cash on hand or as much and you want to keep cash in your pocket, then do it. Get in the house, do that. Awesome. No harm, no foul, but just making sure that my clients understand that going forward. So that's kind of our quick tips. So, when you're thinking about, when you hear people saying sellers paying buyers closing costs, they're truly not paying it. Dollar for dollar, they're allowing you to finance that. You may be able to get that house a little lower, at that $5,000 lower on the purchase price is going to save you about $25 a month. So over the life of the loan, that adds up, on that side of it. So as far as your monthly payment, you're putting more towards your principal, all that good stuff. So anyways, that's kind of my quick tip for today. So if you have any questions on that, give us a holler. Go over more with that with you individually if you'd like. So market stats, I guess I pulled these yesterday. So as we look here, we had 733 new listings go live over the last 7 days. We had 417 new contracts written. So that number pretty much has been staying the same. So what we're seeing more, inventory come on the market every week, or the same amount, 700, so 750. And, we're seeing more inventory, which is more selection. And I just got out of our mastermind meeting here. It ended at 1 o'clock. And there's about 15 agents in there. We're talking about what's the market and, what are buyers thinking, what are sellers thinking. And and it's one for sellers, you got to price the house right based on the condition, location, all that stuff, and that's what's really key on that, because we're seeing some of the houses sit on the market for 20 days, 30 days, which, a year ago, it was down to, 10 days, so we're seeing a little bit houses stay on the market a little longer. For buyers, it's just getting comfortable, some of them on that uncertainty aspect of it. Of what our rates are doing, and Russ can talk about that. We saw rates tick down just a little bit, just a little precursor to what we'll chat about here in a minute. But the other thing in our mastermind group that we talked about is there was about 140, I think it was 142 no-show listings on the MLS. So what a no-show listing is basically it's on the MLS for agents to see. And it's a listing that would be coming on the market in the future, essentially. And that seller's probably maybe wants to gauge interest. If agents are calling that agent saying, hey, when is it going on the market? Can you tell me about it? All that kind of fun stuff. Or they're doing paint, they're doing carpet, they're getting that house ready. And to put that in perspective, last year at this time, we saw about 80, no-show listings. So what that's telling us is there's more inventory in the pipeline that's going to be coming down the pipeline, in perspective of that. So as from a buyer, you're going to have more houses to choose from. From a seller, you're going to have more competition. So you got to, take that information and do what you will with it. And at Champions Real Estate Team here, we're going to coach you on what does that mean, and how can we best position you as a seller to compete in a market that has more inventory. You're not just the only bell on the block. There may be other houses in your neighborhood that buyers can choose from, and slightly turning into a buyer's market. In our next graph, you'll see that we're at about a 4.8 month supply of inventory. So that's the absorption rate. So basically, if we didn't have any more houses come on the market in the next, after today, we'd have basically almost 5 months worth of inventory, and then we would be all out of houses. Perspective, that thing was down to like 2.6 a couple of years ago. So, definitely in a larger seller's market. So perspective 0 to 3 months is deemed about a seller's market. 3 to 6, is a neutral market, healthy market. 6 and above is deemed like a buyer's market. So we're kind of more in that normal market, environment that I feel that we're in here. So kind of touched on that months of inventory. So I'll show you that graph here, or chart or whatever, so you guys can kind of see the numbers. So we had just under 4,000 homes on the MLS in the Omaha Lincoln area. Douglas, Sarpy County, the Omaha metro area, we're sitting about 22, almost 2,300. Douglas, the existing homes is at 1,401. So that number is ticking up in that regards, and new construction is kind of going down a little bit because a lot of the spec homes they were building, are starting to come off the market. Those houses are getting spoken for, getting bought. And then like I just touched on the months of inventory, average sold price hovering right around that 356. I don't think it changed from last week. Yeah, that months of inventory is what we're seeing. And people are like, well, when's a good time to put the house on the market? When's a good time to buy a house? All those things play into factors, and we watch those charts and what's going on, over the years, in regards to all that kind of fun stuff. So if you have questions on that specifically, reach out to us. Happy to help you go over any of that stuff. But in order to buy a house, some of you may need financing. So let's jump in here with Russ and chat about what the rates are doing. I saw that like I said, they ticked down a little bit. So you probably got more a pulse on the market. So how's it going, Russ?
Doing good. You're right. We have seen interest rates improve. This really started last Friday when the non-farm payroll report, commonly called the jobs report, that's released on the first Friday of every month, came in much weaker than expected, and the prior month's numbers were revised down as well, meaning fewer jobs were created. And so that told the markets, or suggested the markets, that maybe the Federal Reserve Bank should have started cutting rates. Of course, they met last week and did not cut short-term rates. And so the market has adjusted and is expecting that the Fed will cut rates at their next meeting. In fact, the last numbers I looked at was a 90+% chance of a short-term rate cut for things like credit cards, student loans, and auto loans. I don't tell you this to suggest that you wait until after the next Fed meeting to buy a house, because we don't know what will happen. And let me give you an example. Last September, when the Fed had their September 2024 meeting, leading up to that meeting, it was pretty much a done deal that the Fed was going to lower short-term rates. As soon as they did that, mortgage rates spiked higher over inflation concerns. So we don't know whether that could happen again. What I would suggest to you is that, and I think Mark would echo this, if you see the house that you want, go buy the house now. And let me say why. In the event that rates move higher, you're going to pay a higher rate. In the event that rates move lower, there is a lot of pent-up demand on the sideline waiting for lower rates. And if you have multiple competitors to try to buy that house, that starts to put pressure on home prices. It's harder to get concessions, things like those seller concessions that Mark mentioned a moment ago. So what I'd encourage you to do is get a hold of Mark and his team and get a plan put together, no matter what the Fed decides to do and no matter what way the mortgage rate market moves.
Yeah, and that's what we were talking about at our mastermind meeting is, the agents that were doing open houses and things like that. And, as buyers come in, you're thinking about buying, we're kind of uncertain of what's going on. And, maybe rates are going to drop. And, and you get all that kind of just misinformation that they're hearing out there from the national people or wherever they're reading it at on social media. And then all of a sudden they see rates drop, and all of a sudden, boom, like you said, then the floodgates open and they drop down a little bit. And then you're the uncertainty or if they're going to go up or go down. I mean, like you said, we don't have a crystal ball, but our goal, like you said, I think when I did my last quarterly market analysis letter, I think it was a 47.8% appreciation of the average sold price went up in the last 5 years. So it doesn't matter what the rates were over the last 5 years. If you just bought a house, on average, your appreciation went up 47%. And so when's the right time to buy? The right time to buy is when you are ready to buy a house, that the monthly payments make sense, your needs, your wants and needs are taken care of when you go to look at that house. And basically just, getting in the game rather than waiting on the sidelines when you're, kind of just trying to time a market. It's the same thing, in the stock market, you're trying to time the ups and the downs, just getting your foot in the door to start building some of that equity into your house. I know when I first bought my house in 2007, my very first house, it was at 110 when I paid for a split entry home. And then, the financial crisis hit. And in 2010, they're selling that same house for 104, and so I bought it at 110, selling it at 104 3 years later. So I had a gap. And then I held on to it for, I think, 11 years. And I ended up selling it for 190, I think 187 or something like that. And so obviously you go dip down up, and so, that you don't have a crystal ball, but that's the longevity of it. And then ultimately you're paying that principal down every month, all that kind of fun stuff. So it's kind of like a built-in savings account. And that's why I call it a house savings account, essentially that equity, because some people are like, what is equity? Well, that's a house savings account. It's not as easily accessible to get to it. Yes, you can go get a HELOC, a home equity line of credit. So you can pull out money out of that, but then you're paying interest on that money that you're using on essentially your own money. But you at least have access to that in a way, shape, or form, I guess. But yeah, I guess we kind of divulged from where we went there. But anyways, no, I try to give real life examples, stories that I personally have gone through, things I've seen my clients go through, in ways that how can that help, educate the public out there as far as buyers, sellers, real estate investors on what makes sense for you. And that's our goal. And if it makes sense to buy a house now, great. We'd love to be part of the process, coach you, educate you, and do it. And if that means waiting 6 months, a year, what's the best course of action for you? So but yeah, all we can do is present what the market's doing. And then, when the timing is right for you, I think that's the best time for you to buy a house. Not trying to time is now the housing market is now the time to buy a house. Yes or no? I mean, I can go over graphs and I can get all boring with you and talk to you about all that fun stuff. And that's what I usually do in our coaching sessions and stuff like that, is go over that in depth with you so that you try to understand the big picture of the real estate side. And that's the fun part of what I like about doing this, is it's just a coaching session. Well, I'm coaching hockey or coaching my kids, or I'm coaching, my clients out there and the general public on what it means to buy and sell real estate and all that fun stuff. So anyways, I'll get off my soapbox here. But yeah, if you have any questions, love to chat with you. 402-672-7670. Give Russ a holler at 290-8936 on any of the mortgage stuff or those type of things on what's going on. Yeah, that's kind of all I got for today. So, do you have anything?
Nope. Have a good week. It's going to warm back up, everybody.
Gonna warm back up. Kids are going back to school. I know, our daughter's starting preschool next Wednesday, I think it is, and then the grade school starts the following week. So, happy back to school for all you kiddos out there. So, anyways, awesome. Take care, and we'll see everybody next week. Hopefully.